Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Tuesday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. Abbreviated market today, but we are on for the full hour this morning, and we have a jam-packed show. A lot of news to discuss, and we have two guests joining. First off, at 8:15, we'll be joined very briefly by Gene Munster, managing partner at Loup Ventures, who will I imagine talk Tesla with us, and then at 8:35 we're going to be joined by Nic Chahine. In between, before and after those guests, we have to talk about Deutsche Bank coming out negative on the autos and Pepsi ahead of earnings in a couple of weeks. We have Roku called a downgrade this morning as well. We have auto sales later today. We're going to talk about the S&P's rebound, surprising strength in yesterday's session. A lot to get to. Joel, where are we at in the S&P futures right now?
Buy the dip is back. S&P's up 14 points, continuing to make new highs of the session. One number only on the upside. That was Wednesday's high at 27.48, Friday's high right in that area as well. Pre-market low, forget about it, 27.2050. We won't see that in the abbreviated session. Crude knocking on the door, up $75, up 90 cents. At 74.84. Gold trying to get back over 12.50, up 7.40 at 12.49.10. And silver just hanging out at $16, up a little over a penny at 15.995. Triple D, how you doing this morning? How was your holiday?
Do I get holidays? No, you asked me that yesterday because the holiday was technically actually on Monday, or we were supposed to have the day off because it fell on the Sunday, but I don't get days.
Oh, I got you.
I have to work the Canadian holiday and the U.S. holiday, so no holiday for me. And I have egg on my face yesterday. I had a pretty bearish rant. The whole show I was talking a little bit bearish, now a lot bit bearish. And you know what? The Bulls took control and they slammed her, and they slammed that in my face, and we ran. And I did not see that run coming yesterday. I did not see that run coming here this morning. So obviously, we're right back up where we were. So fade trade works. Not only buy the dip or sell the rip was working, but buy the dip was back in favor there yesterday. So I'll admit I had a bearish rant pretty good yesterday, and I was wrong.
I mean, I won't say I was right or I won't say I was wrong. I did have a short position. I was hoping. I thought, man, Monday is the day. We are going to crack 2,700. We are going to take out last week's low. And when they, yeah, and do you ever notice? Okay, when they like the pre-market low was 98.50, and they couldn't even get there. They got the 0050, and I'm like, you know what? They're not going to take out that pre-market low. Now I had no idea we'd be 40 handles higher this morning, but if you're looking for keys, and we talk about the pre-market levels in stocks, keep an eye on the pre-market levels in the S&Ps. Like today could be an example where we do bump up to 47.48 in that first bracket, and then everyone that bought the open gets stuff, and then we just kind of trickle lower the remainder of the day. But let's get to the news, and but we got.
Well, before I just want to talk the S&P because
okay,
we're not going to turn around and get bullish here. We're not going to get bearish. You know what? I went to market neutral here, and this is the disappointing thing because I'm not on live all day. So listeners, if you're not in the chat, I actually posted in the chat because we couldn't take it out in the morning. I was like, I don't like this trading action. And if you were in the chat or Benzinga chat there, around 10 a.m., I posted that I went back to market neutral because we just were not going down. You know, the banks were starting to catch a bid. I did not like the trading action from the bearish side. So I took off my shorts and went back to market neutral, which was a good call. That was around 270 on the SPY. We're back up here at 273. So now we're right back up here again. I still probably, I'm going to initiate some shorts up here depending on what the trading action is. But like I said, you've got to be able to flip your opinion as a day trader. As a long-term investor, you stay the course. Sometimes you raise more cash, sometimes, but as a short-term day trader, and even as a swing trader, you need to be able to flip your opinion very quickly there. So if we were live on the show at 10 a.m., I would have said, I don't like this trading action here as a bear, and I'm going to flip over to neutral. And that's what I did. So covered my shorts in and went to neutral. Did not go long because I wasn't a believer that we could get all the way back to 273. Wish I would have, because holy cow, that's an impressive 2-day rally. But we're right back up here where we were at resistance again. And if you look at the range from the last 6 days on SPY, go 273 at the high. So here's the highs from the last 1, 2, 3, 4, 5, 6 trade days. 273.61 and 269 the low. Then we had an inside day. The next day we had 269 at the low, 273.86 at the high. Next day with 268.49, so it kind of took out the bottom, but then we got back above it. The next day all the way back up to 273.66 again. Then yesterday we got all the way down to 269. Where do we come back to? 273. You're in a trading range here, guys, between 273.5 and 269.5. And I guess you continue to play that range until it doesn't work. We get back up above 274, up 275, maybe we can have a shot to get back up to the highs here again. As of right now, we're at the top of the range, so I lean a little bit more on the short side here, but still trading market neutral here. I want to see what they do after the market opens. We do have short, obviously, a shortened trading day today here at 1 o'clock, so we'll see what they can do in holiday trade. But short and weak, but trade the range, I guess, until it doesn't work.
All right, Dennis, how do you approach half days? This is coming from Joe Chase in the Google chat. How do you approach half days going into the holiday regarding your positions?
You just got to be aware, obviously. It's sometimes, you got to be aware it's going to close. So, if you're an intraday trader, make sure you're not at 1 o'clock and go, oops, because there's a lot of traders like, I didn't know we were closing early today. Make sure you're closing early today. But I don't think I approached anywhere different. The only thing is in holiday trade, I will say, is the markets are thinner. And what that means is there's less participants out there, meaning that if a stock has a move and it's going in one direction, it can have a bigger move on less volume because it's thinner. So that's the one thing, is you can actually see increased volatility sometimes because the books are thinner. Sometimes, it's because there's nobody out there and there may be nothing going on. But if there is news or if there is a catalyst, the stocks can actually move more because there's not as many players out there and not as many fade traders to absorb the move.
Okay, Dennis, can you explain why a stock will trade with a tight spread on level 2 and then all of a sudden the spread will be $1 or more?
Well, that's just on news usually. So if it's tight and then you get news, basically. So the majority of your market makers now, and your majority of, your liquidity on your books is high frequency traders. So I would gather, they say that high frequency traders make up half of the market's volume. And I don't know any statistics or there's any papers that studied this, but I would probably gather that 80 to 90% of the orders on your book are probably high frequency traders. So much more than, the overall volume. They're moving around. Those orders aren't stable. They're moving around based on everything. If the S&Ps tick down, they move their bids on the 500 stocks. They're providing liquidity out there based on, what the overall market is doing. Probably looking at the S&Ps, the E-minis as the leader there, and then adjusting orders accordingly as the E-mini moves. E-mini moves down, they drop their bids down and drop their offers down. E-minis move up, they bring up their bids and bring up their offers. Those are basically envelope orders that are trying to take advantage of the arbitrage, and they're sitting out there on the book. So as news comes into the markets, they're going to back those orders off because their profit margins are so razor thin. They can't get run over by news. The whole game as a market maker is to pick up the nickels in front of the bulldozer, but don't get run over by the bulldozer. So when the bulldozer's coming through with a major event, they're going to back off on those stocks. And if it's on the overall market, they'll back off on everything too. And that's, where we've seen flash crashes happen before. So the market is what you would say is subject a little bit more. It's probably less volatile 95% of the time, maybe even 99% of the time. But when there is news, that's when volatility can actually increase exponentially because there's no real orders on the book anymore. It's all high frequency traders that are just making markets, and they don't want to be trading when there's news out there because there's too much risk.
All right, I got a lot of green on my screen here, but not in Facebook. Spencer, what's the news on Facebook?
Well, this is, I guess, from a couple of days ago and yesterday. It's sort of an ongoing thing now. But several government agencies have essentially teamed up and are looking into Facebook now and looking into their data sharing practices. So the SEC, the FBI, and the FTC have joined with the Justice Department in inquiring about how Facebook shared data with various third-party firms, app developers, Cambridge Analytica, etc. So this is an ongoing story that will keep unfolding, at least for the time being. The data concerns are not going away.
I mean, we've saw this happen, obviously, on the major, stuff that sold out for more days. We've seen a couple of blips where, they've had some stuff like this happen since then, and the stock's been bought on the dips. I don't see any reason why, depending on what the overall market does, but I think they could buy this dip. So, fade trade seems to be working, buy the dip seems to be working, sell the rips seems to be working too. So you're fading, you're coming down, you're getting $2.50 back. I don't know. I wouldn't be surprised they just buy it back. So I'm not coming here and selling on my Facebook because there's more information here. But, obviously, again, at 9:30, let's see what they do when the real liquidity comes in. See where the stock opens. That's the whole thing. You can have a thesis. So in every trade, you kind of have a thesis going into the trade. I think this, or, I think this is going to happen. So, let's say this hypothetically, the stock opens at 195. If it starts going 194.5, 194, 193, you're like, oh, your thesis was wrong. They aren't coming in here buying it. They're still selling it with the real liquidity. So then I would be scrambling around how to cut that loser. That's the whole name of the game as a professional trader or somebody that's doing this actively, or especially if you're doing it for a living. You've got to have, a contingency plan when your thesis is wrong. So I'm developing a thesis here this morning. I think the Facebook news could get bought. I'm going to look at what it does in that first 5 minutes. Where does it open? Does it open 195, come back? I might not buy the opening print because I'm not that confident in the thesis. So I'm going to see where it opens, mark down where it opens. Opens, let's say, 195. Goes down to 194, shakes a few people up. Comes back up over 195. Maybe that's where I strike and say, okay, now I have an out. The low of the day will be my out if it takes on 194. But it's back up to 195. I think buyers are emerging. I think this could get it back. That would be the way I would set that up today. So not buy the opening print. Write down where the opening print is, like where it opens at 9:30. Watch where it goes to the low of the day. If it opens and starts to go higher right away, then maybe use the open as your low of the day, and as you're out. But that's just how I set up a trade. Always have a contingency plan on where you're going to get out if your thesis is wrong.
I'm just looking at the daily chart here, and I can't really give you much at 195.10. But if you look at the trading action, this is going all the way back to June 12th, all the way back here, a couple weeks. 192. I mean, that's my level. I'm not buying at 195. I'm not selling at 195. I'm just 192. I'll hold out for that level if I'm, whether it's today or tomorrow or covering a short. Yesterday's low, 92.22. A low on the 13th at 91.91. Another low at 91.56. So that's really the only good level I can give you. On the downside, on the upside, 97.36. That's the close. People are scratching their head. Hey, I'm long Facebook. The SPOOs are up 0.45%. My stock's down 1%. If I could get out flat on the day, I'm going to try and do it. So that's my take on Facebook.
There is just a ton of news here today, and we're out of earnings season, but let's go to Tesla here. Actually, let's wait 1 minute because you're going to talk Tesla with Gene. Let's quickly slip in Campbell's CPB because Dan Loeb is getting itchy in there, and he is pushing for a sale. And that's why you see the stock trading up another $1.71 here this morning. I don't know if this is going to materialize or not, but we know it's all up on hype, obviously, that they want to, that they're maybe potentially going to push for a sale here now. Not sure it's going to be one, but maybe there is. CPB thoughts, Joel, as we get back up to where we were on the original rumors.
Exactly. 42.53. That is your pre-market high. The high when the initial news came out was 42.88. So anything up there in that higher over 42.5, boom, I'd take a look at selling unless you want to hold out for a merger.
So, Gene, coming in here. We're going to take a quick break.
Let's take a quick break. All right, and we'll grab Gene Munster, managing partner at Loup Ventures. We'll be right back.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep. I'm your co-host, Joel Elconin, along with Dennis Dick, Spencer Israel working the boards, and we have Gene Munster of Loup Ventures on the line. Gene, you're a busy guy. How you doing today?
Doing wonderful. Thanks, Joel.
All right. Couple quick questions and some tough ones for you. You've been on Wall Street for a long time, and you've gotten a lot of stocks right. Can you give me one or two that, maybe you weren't so right or maybe wrong on?
Well, I guess there's more than one or two. I think we typically did a good job with kind of the 2 to 5 year horizon. But one that I have not gotten right, at least over the last couple of years, has been Facebook. So we're a part of the Facebook IPO. The stock, as I'm sure a lot of people remember, had a rough start right out of the gate. It was down almost 50% as they announced the transition to mobile. So we were positive on that kind of move from, call it 20 back to 70, but I've missed more than 100% of the run here, in part because I just not a big fundamental believer in the need for social media. And I think that, but Facebook is probably at the top of the list of ones that we've gotten wrong. Other ones,
that's good, Gene. Gene, one's good, because I know we only got you for a few minutes here. Since you've been covering Tesla, that's been for a few years now, has there been a point where you've doubted, the company or your original thesis?
There has been. I mean, we have to ask ourselves, what's the bear case? And I think that the last quarter, or when they came out with the Model 3 production numbers after they reported the March numbers, we had to do some soul searching. And I think that, we were pretty clear in our research about that. I didn't feel that way in this most recent number. I feel more conviction that this is going to work. But there's still this powerful, credible bear case that's not going to go away at least for another 6 months.
Okay. Using its current facilities, tents, and the factories they have, which, I don't know if I'd call that big time car production. How could Tesla legitimately raise production, and what would make you turn neutral or bearish on the stock or its level of production?
So what would cause, or what they need to do, or what they're trying to do, and I think they're going to be successful at this, is change the paradigm around manufacturing from square feet to cubic feet. So if you look at these new general manufacturing lines that they're putting together, they look more like roller coasters than they do a traditional manufacturing line. So they're optimizing the space, the vertical space in the factory, because they have limitations around it. But there's a natural advantage to that allows them to produce cars faster. And so they haven't been able to do that yet because they're still designing this new manufacturing paradigm. But we think ultimately they will be successful at rolling that out. And eventually this tent either becomes a permanent add-on or it goes away.
Okay.
The other big piece I just want to mention too is, I think at the core of our beliefs around the Tesla story is that it's a great product. It's a very different type of experience than a traditional car. And I think that great products, it does remind us a lot about the first iPhones that came out, as people just feel this incredible need to tell people about it.
Okay. I know you're confidently recommending this stock. You mentioned yesterday that you think they're going to do a capital raise in the Q2 or Q3 of 2019. That would have a diluting effect on our already bloated share price from a PE perspective. I mean, just talk about that. If you think a capital raise is coming, you're already at a high PE. I mean, is it hard for you to keep your bullish stance on the stock?
We don't think that this should be valued, at least in the near term, on a traditional valuation metric like a PE. And the reason is that the opportunity that they're going after is so great that it's going to have leverage down the road. And down the road might be 2020 or 2022. So we're not as concerned about what a capital raise in middle of 2019 could do to that. We think about this as, call it roughly a $60 billion market cap. that's going after a multi-trillion-dollar opportunity, not just around auto, but around renewable energy. And I think that that's what's unique about this story, is that it plays into what are undeniable trends about the future, whether it's electric cars or autonomy and just renewable energy. And so that's the kind of stuff that the bulls like ourselves get excited about and are able to look the other way on this egregious price to earnings.
Okay. One last question for you. You know how people like to own companies that they use their products. I know you got your iPhone. I know Amazon and Google, and you probably have a Netflix account. And I know you're not on Facebook. Do you own a Tesla, or do you plan on buying one soon?
Don't own one. I'm seriously looking at all-wheel drive Model 3. And I think that the simple answer is that the current configuration is a little bit rich on these all-wheel drives. Okay. But as soon as they kind of come down to the 48,000, 45, that's probably when I'd buy one.
Okay.
Gene, I want to just grab a quick one with you. Just overall thoughts here, because, you know, I like the story. I like the Tesla story here. It's valuation that has always been an issue for me. I mean, obviously, you know, the company hasn't been profitable, but it's not only that. It's like I look at Ford and I look at GM and I say, should Tesla be worth more than them? But, you know, a lot of argument is that this isn't just a car company. What are your thoughts here for somebody that just can't grasp the valuation?
When you can't grasp it, when you look at it, the other car companies, that I think is a mistake to think about it and compare it to traditional car companies, in part because they're essentially a computer on wheels. It's a whole different manufacturing process. It's a whole different service type of process. It's a whole different model. The traditional automotives make a lot of their money on parts, whereas something like a Tesla, because it doesn't have as many parts to break, that's not how they make their money. They make their money on software. So I think that the trap here is, if you look at this as a traditional car company, I think you need to look at this as a computer on wheels and an autonomy play, and then the pieces start to fall into place.
Gene Munster of Loup Ventures asking questions here on Tesla Motors. Thanks a lot, Gene. Have a safe 4th of July. We'll talk to you again soon around earnings season for Apple and all the big boys. Thanks again.
Can't wait. Thank you.
Okay, 822 S&P futures. You made a pre-market high at 2741.50. Dennis is putting his buy order in right now to buy Tesla shares because Gene convinced him. Dennis, where did you get filled in your long-term portfolio?
Oh, funny. No, I won't be buying Tesla. It's again, I'm just Great more question. Of the Warren Buffett approach. So sorry, you know, I just can't jump in here. And, you know, I like, you know, the story. Elon Musk, innovator. I'd rather, you know, where I'd rather, if SpaceX, I like that SpaceX stuff he's doing almost more than the Tesla. And, you know, you are buying, you know, the genius that is Elon Musk when you're in. It's the only way to get in is on Tesla. I'd love it if he came public with the SpaceX stuff, though, because I really believe, you know, that's where, you know, we're obviously, you know, there's not nearly as much competition. That's where a lot of our future lies, is, you know, figuring out how to better utilize everything else off this planet. And he is an innovator there, too. That's where I really like the Elon Musk stuff, is the SpaceX. And I wish somehow we could invest in that side.
You know, the other thing, too, full disclosure, I'm not long or short Tesla. You know, Musk is really taunting Wall Street. And, I don't know if you're going to taunt, let the numbers speak for themselves. But that's one thing that, you know, we're going to do. A real car company now. Okay, you produced how many cars in a quarter? You're a real company. I think he'd be better, and he has backed off a little bit. But I wouldn't taunt Wall Street. That's really the only thing that really is my only hang up on it. But let's get to some other news here. And since we're talking autos, Spencer, you got some auto sales for us.
Well, I don't think they're out yet.
They're not out yet.
No,
okay.
they're due out later this morning. We're expected to get monthly auto sales. Remember, didn't GE say they're gonna stop, or GM said they're gonna stop giving the monthly number. We do have the expectations though from Cox. They expect to see Ford monthly sales for June down 1% on a year-over-year basis. Fiat Chrysler, they expect to see them up 7.8% on a year-over-year basis. And Toyota down 1% and Honda up 3%. GM, they did give an estimate that they do see June sales up 4.9% on a year-over-year basis. So let's see what happens. I believe they come out closer to 9 or 9:30.
All right, just quick technical here, and I don't want to talk about GM coming down at all. About to fill the gap. What got it? I mean, I looked at it short technically when it was up there, 43.5, 44. I didn't hold on, but I had no way of knowing that the tariff talks and everything. I would just look if it can fill the gap. Remember, Dennis, looking at the daily chart, we gapped up. Who was it that made a big investment in the electric unit? I can't remember who it was, but you had that gap and go, then the rally. This comes back down under $38, fills that gap at 37.87. I might look at it for a long-term investment.
A lot of support, 35 to 36 bucks. I mean, we've been down here multiple times. Go out to the monthly chart. You can see the support I'm talking about. The level just kind of jumps out at you. We've crossed it a few times back and forth, but 35 is where we bottomed earlier this year, 34.50. And then I know we cut through in 2017, but there is buyers down there. I mean, it becomes a dividend play at a certain point in time. You get down in 35s, so it's got a 4% yield, starts to look like an attractive way to pick up some yield. So you get the dividend players coming in. I do think there's buyers 35 to 36. So I can
not going to get there.
I can get on board with that.
It's not going to get there. Not with the way
it's gotten there how many times though. It's all about probabilities too, and we have gotten a 35 in the last 3-4 years. Got to be a dozen times. Okay. So you're saying unlucky 13, it can't get there again. I'll say it could. I think it could. Depends on what the overall market does too. I mean, we're taking off blast off highs. Maybe GM's the one that picks up the bid, but this chart doesn't look that great to me. It's filled the gap. I think there's support below, but I think it might be at 39.5.
I'm stepping in if we get under 30. If we get near 38, we fill that gap.
It's not bad. You're getting there. I think you could maybe get 35 or 36. But again, we saw what happened with me and JP Morgan. I tried to save $1 and the stock blasts off the orbit from that point in time. So sometimes it's better if you really want a stock to strike a little early or, buy part of the position. That's what Kramer says too. A lot of times is buy part of it. And then you don't miss out completely if, the stock doesn't get to your actual level where you want to buy it. Or right puts like Nic Chahine.
Yeah, we'll talk about that with him.
Maybe Nick will tell you to rate the 35 or 36. He's going to be on here in 8 minutes. So we'll get Nic Chahine on here and we'll be talking about some strategies there that way as well.
You won't let go of that JP Morgan story.
No, I still don't.
Could you refresh our listeners?
I don't forgive you for that. So this was back slightly after the financial crisis. This was after the whale trade. So back in 2011 when JP Morgan got down to, actually it's 2012 because it made the original lows on the whale trade, I think like 28 bucks and ran up to 38, 39. Then it came back down. And I was like, I want to buy this JP Morgan. I was ready to buy it at like 31 bucks. And you're like, you're going to get this at 28. Just hold on. You're going to get your 28 bucks. And I never got it. Never got to my order. And it ran to 40 and it ran to 50. I was so angry at you at 60, at 70, and 80, and 90, 100. And I'm still mad at you, Joel. $120. So here for me trying to save $1 in my long-term investment portfolio, I missed out on, on 90 points of move. So keep the investing and trading separate. Don't try to save $1. If you really want to stock in your long-term investment portfolio, pull the trigger, pay up a little bit sometime. Don't miss out on all that opportunity. That's a huge opportunity cost. So I don't forgive you for JP Morgan.
Okay. All right. I just want to talk about Bitcoin a little bit here.
Board here. What did it rally?
Yeah. And
Bitcoin.
Look at this. It's hot. And how about the classic move where, everyone's leaning on 6,000, right? And I'm talking futures here because that's the real market. Everyone's leaning on 6,000. You take out all those stops, you take it to 57, 55, and then you turn around and now you are back at the level of levels here, 6,800. I mentioned this a while ago. We mentioned all those highs in that area. So, Dennis, we break above 7,000 here. I'm even going to give it a little bit more room here.
Back in?
I might. If we clear
Look
7,
at Joel.
I will. If
Joel's
we clear
the Bitcoin master, just to refresh you. He is the one who bought Bitcoin at 6,800 or 7,000 on the way up and ended up riding it in 3 weeks all the way up to like 20,000. And he sold up there. He sold like 6. He doubled his money in Bitcoin like 3 weeks. He's like the smartest Bitcoin trader out there. So if Joel gets in Bitcoin, he almost might talk me into Bitcoin there. But It's funny, CNBC Fast Money buried it at 6,000. Now it's starting to go up. So
you know what?
the CNBC bottom.
You know what? The only thing is that we were doing that special at the end of December. We should run that article again, Spencer, because James Angel and Joe Saluzzi, those guys could not be more right about Bitcoin. And I figured, hey, if I'm going to do a special in it, I got to have some skin in the game. So it wasn't fundamental. And also Jeff Goldman been telling me to buy it. It's like $250. So
what's Jeff saying? Is Jeff getting back in?
He's scalping it.
He's still trading it. He's still
trading it.
Jeff's a good trader though, so he'll figure out.
Yeah.
You know why Jeff is a good trader? Jeff, if you're listening, you know why you're a good trader is because he knows how to cut those losers. He knows how to get out. And I remember something, and I was talking with Spencer on the pre-market show here. Jeff Goldman, just to back up, he ran that prop JC trading firm for a long time. And I remember him having this conversation with me. I use this on the show lots of times. And he says, Dennis, I don't know how many times I've interviewed a prospective trader and they've come in and sat down and they said, you won't believe this, but I've never had a loser before. You know why they've never had a loser before, he says? Because they don't take their losers. I say that too. So, it's impossible. You're not going to have 1,000 trades and have 1,000 winners. It doesn't work out that way. You will have losers. You will bet wrong one time and you will bet on a stock that isn't going to come back. So people who have never had a loser before means they don't take their losers. They wait till the stock comes back. 90% of the time they do come back. It's those 10% that don't come back that eventually erode your portfolio. With the Bitcoin and the crypto trade, if you were trading this stuff, you had to, look and say, okay, it's going to cut through this level. I need to be out. You need to have an out when you're trading. In long-term investing can be a little bit different because if you're, I've held stocks to zero, but you got to hold on to your winners longer too. I've had stocks that I'm up 1,000% in, like MasterCard. So if you're going to hold stocks and just forget about them, you want to hold them to zero. I'm okay with that in your long-term invest portfolio as long as you're holding winners that are making you 200, 300, 400% to make up for it. Swing trading, day trading, absolutely need to have an out. Discipline to admit you're wrong, cut your losers, move on. You're trading this crypto stuff. If you're getting into Bitcoin here at 6,600, at least have an out. If it starts cutting back through those lows at 5,800, I'd say get the hell out. So, maybe it's going to get a pop. Maybe we're going to, get some life here again. I'm not a believer in the long-term story of Bitcoin, but in the short term, everything can make you money. So if and I'm not going to argue with the pricing action here. It's catching a bid here right now. Maybe this thing could go to 7,500, 8,000 again. So, if you can trade anything, as long as you have an out.
And Dennis, you just staying on that theme. You've talked about some of your best trades being a losing trade.
Oh yeah.
Yeah.
My best trades I've ever made, I've lost money on. And then people will say, well, that's a dumb statement. No, because you know what? I was dead wrong. And the thing just eroded and died. And, and a lot of times I really believe that I've been in the business for 19 years, not because I'm a good trader. It's because I can admit when I'm wrong. And I can admit that, hey, I'm going to get out. It's because of my, conservative nature, and I'm a very conservative trader. I don't go to the, the casino and gamble or anything. I'm not really a gambler at all. People think I gamble for a living. I'm making educated bets, and those bets might work 55% of the time. So if I'm going to be wrong 45% of the time, I've got to know how to minimize the damage from when I'm wrong. Yesterday, I came on the show and I was fairly bearish. I mean, not even fairly bearish. I was full on bearish. I had trades. I was up some pretty good money. So, because I was bearish the day before. So I was kind of, and you're in your thing. So anyways, the first half an hour of trading, I was trying to ride a few of these shorts. And I'm like, I said it to you and I said it in the chat. I'm like, it's not working. I mean, these banks are starting to catch a bit. The banks were the leader down here. And, it looks like they want to hold 269 again. I said that to you too. And I turned around and covered all my shorts and went neutral again at around 270 on the SPY. Glad I did that because we're 273 here now. So, I was wrong yesterday. And you've got to be able to admit when you're wrong.
All right. All right. We could have some fireworks here in our next conversation. We're going to bring up Nic Chahine. He's the author of Create Income with Option Spreads. We've been talking a lot about you behind your back, Nick. I don't know.
Yeah, he's listening.
I heard. I've got
Nick. I had you on Friday. You had me yesterday. It's obviously you're all over me yesterday. And correct. I mean, you were probably buying or selling some puts there, and obviously correct there. So I can admit you got me yesterday.
Well, I sent you a private message, dude. No.
You got me yesterday. I had you Friday, though. So you got to admit I got you on Friday because we're talking.
And I got you on Friday too, Nick. I was, come on,
we
earlier.
didn't get off the bear train fast enough.
Yeah.
But I'm only concerned about the people who took my money. I mean, whose money I took for the long-term lottos. In the short term, the headline trade makes it a little tricky. But like you said, Dennis, yesterday somewhere in Twitter sphere that, how funny how the news matches the charts. I used to doubt that years ago when I started talking to technical traders, but there's something to be said to that point, that the charts really lay out the plans ahead. Like you have one scenario versus another, and sometimes the news comes out and then justifies one or the other. So but if you stick to your system, whatever your system is, it should work out for you as long as you're sane in your approach.
And what Nick was referring to was I tweeted out, I just tweeted out because somebody was on, like, I don't know what it was, on CNBC, and they were talking, I can't even remember what it was, but just set me off. And it was like some fundamental thesis on why, Tesla was selling off here all of a sudden. It was all because of this. They always want to dig for the fundamental reason why a stock is selling off. It doesn't always have to be a fundamental reason. Sometimes there is, and Nick, sometimes there definitely is. Yeah, but the media will want a fundamental reason 100% of the time. Yeah. And half the time, I would bet, is there's no fundamental reason. It's just overbought, and it's a technical move where, the chart starts to look ugly. There doesn't have to be a fundamental reason for a stock to sell off.
And they also create the situation. So they'll give you the milestones that are absolute musts, in their terms. And then because let's face it, without headlines, it's hard to grab people's attention to watch or read an article about news. So they're in the business of inflammatory headlines. And it just ticks me off sometimes, but that's what they do. But I wish that more people realize it. Like, the all-important job reports, 7/6, everybody knows that on 7/6 the world will end. So just tell me what time. What, 7/5 at 2:00 I start buying puts or what? It's just everybody knows that this will happen. Well, then there's no way it's not priced in, or most of it already. So if anything, is going to be an event to flip the other way around, when the world doesn't stop turning. So the way I'm saying is, stick to your fundamentals, but be prepared. So if so many people, smart people, are saying that the world's going to end soon, metaphorically speaking, then I should be protected. And what's wrong with spending a few $100 to protect thousands in a portfolio? Nothing. You pay your car insurance every month, not because you think you're going to crash, because you'd like to sleep well knowing that if we crash, we're okay.
Okay. Nick, and I got to say, we've had a lot of different guests on the show over the years, and, I try and pick up and learn different things from different guests. But, one thing which you've tried to encourage me to do is, be more market neutral, and also not always be on the buying end options. And Dennis, that's something you preach all the time. And
I don't like buying options.
because I had a lead on some puts that are in the money. I just, I had to have a hedge. I didn't want to take the position off at 2,700 because I really, really thought we were going to crack, right? Yeah. And I basically locked in my price by shorting the lower puts. And it gave me another option. So, when the market flew up yesterday, there was no pain at all. I have the spread on. I can leave it to expiration. Yeah. There's no pain. It forced
you had a guaranteed win on your hand, and you guessed it right, and then you locked it in. So it's kind of like buying a debit put spread, but getting paid to get into it, and that's what you did, which was brilliant. So that's the kind of trade where simple, you got the win, you locked it in, you still had some extra potential if it continued lower, but you lose nothing by waiting.
Yeah, and there was one point when the market was unchanged, before we had the big rally, and the puts that I was short were in the red, and the puts that I were long were in the red too, because they were just sucking that juice out of it. But let's move on here. A lot of news. Could you give us for our Tesla bulls out there? Could you give us a 3, 6, 9 month trade here? Something in Tesla if anybody's looking to buy the dip here.
So Tesla, fundamentally, I dislike the model very much, just because, this week, if anything happened, it answered the question, what the heck is it? In his words yesterday, finally, they're almost a car company. I couldn't believe he said that. So Tesla, Elon is the biggest risk to the company, as he is the biggest asset to the company. So that scares me right now. I would not want to be short puts in Tesla because technically, if it loses the current level, which has been pivot for the last few weeks, I would say since early June, which is the area where it was yesterday, 320-ish. So if it loses that, some sort of an inverse cup and handle, so it could see the 310 minus, not calling it down there, but it's a bit the technical potential. But fundamentally, he's scaring me with his statement. So I remember not too long ago, he used to not care about the stock price. Say, I don't know anything about the stock price. Maybe it's overpriced. Remember that comment like years ago? And now he's taunting the bears on Twitter. So when somebody is that passionate about their stock price, they might be pushed into a corner into doing something that he shouldn't do. So just in case he does something that he shouldn't do, and I wouldn't be surprised to see an SEC headline looking into statements of him and actually third-party audits of the number of cars that he's actually pumping out. I don't know any of that, but he scares me.
You're making a great point here, and it's one thing. We talk about, the Trump Twitter account, and somebody should just, shut him down sometimes with what he's tweeting all the time because, it can make him look less credible when he's up at 4 a.m. and tweeting something that just comes to his mind. I mean, Elon Musk's Twitter account seems way worse sometimes than Donald Trump's even. I mean, I would love, if I was a Tesla shareholder, I don't want him coming on and taunting the shorts and, saying, we're going to show you guys. And, he's out there and he's saying some very irrational things sometimes on Twitter, which loses credibility for me. I mean, the guy is a genius. There's no doubt about it. The stuff that he has accomplished is amazing. But I wish he would just, run his companies and not worry about what everybody masses are saying about him.
Yeah. I'm not a Tesla hater as far as stock. On the chart I share, there are two arrows. The one arrow on the left is where I went long, so I did benefit from the last push up. But here I'm not ready to go long it just because I'm afraid. And yesterday their technical chief leaves or something like that. So, and somebody said on the news, maybe we should give him the benefit of the doubt. Are you kidding me? There's nobody that gets more benefit of the doubt than this guy. He's got billions of dollars worth of benefit of doubt. So it's based on doubt. The whole thing is based on doubt. So don't be emotional about the stock. And if you're long Tesla, if you love Tesla, that doesn't mean you should be long Tesla forever. Trade it unless you're in at 90, then hey, you can sleep well. But it scares me up here. I would rather be long something else.
Gold, Nick. I know you've been tussling with the GLD and the gold market. Just
the pain. So here's the thing about gold. The dollar killed it. I played the dollar well. I charted the dollar well. I did not believe that it would cause this much pain. And there is something weird going on. So I told friends yesterday or this week or last week, I can't remember, somebody asked me about GLD. I said, probably the best thing to do with gold at this point is buy the straddle. And they did. And then yesterday gold fell and I told them to sell the puts. Book the downside the straddle. Basically you buy the call and the put at the current price, so you would benefit from a big move in either direction, and they did that. So yesterday I recommended, if I had the straddle on, which I didn't, I would sell the downside because it hit the level that it bounced off of last December, middle of December, when it was hit hard, and it's about the same downside move. So here I'm playing the odds of at some stinking point it's going to turn around, right? So I have losses in calls. So what I did, I added sold puts, but much lower than here, put spreads, I should say, and I added some calls. So if we get a bounce, I will get whole in a short period of time. If not, then I'll book the loss and lick my wounds and move away. But in the long term, gold should be higher because we have less of it. So in theory, so we shall see how that plays out.
All right, let's go to some tickers here. Let's first go to some FANG stocks here. And I saw, where did Spinner put in his stocks? He put in, let's go with Facebook here. He's talking FANG stocks with some of the news out today. Give us your take on Facebook.
Okay, so something about rekindling of looking into, quote, the data breach. Is that the deal with Facebook?
Yep.
Okay.
Yep.
So here's the FANG gang first, since I have that chart. I can't. It's not for me. It's not a breach. It's a breach of contract of one of their players, right? That's the same the Analytica thing that they're talking about. So I'm not sure where it's down today. Is it a 188? Ish?
No, not yet. It's only down $2.50 at 195.
Oh, okay. So Facebook is a long-term story. Like I said years and years ago, it's hard to mess up 1 billion or so users. It takes a special kind of idiot to do that. And I don't think this guy or the management team is nowhere near that level. So it's not an obvious entry point. But if you believe that the markets are going to be higher, then Facebook should also be higher. The best way to play it is on big downside days is to sell downside puts or get into it for a swing up higher. If I'm in it for the long term, I may buy it. But if I'm in it to trade the next few months, it's not an obvious entry point. Now, I say this, but going into earnings, typically they deliver good earnings. And if, it could be a catalyst. But earnings short term are kind of a coin flip. So long-term story, still good. As far as a midterm, short-term entry point, it's not that obvious.
Oh, I got a good-looking chart for you here. Play Dave and Buster's gap and go after earnings, hit a brick wall of 56. Now you're filling the gap here, and you did so a little bit more than that. What's your technical thoughts on Dave? I mean, I can't go in that place for more than, I don't know if I've ever been in this place, but if I did, it would give me a headache. Go ahead.
I haven't been in that place for a long time. So this is a pivot area. I keep mentioning areas because they call them mattresses on TV. I saw it. Somebody finally said, "Well, it's not a hard line in the sand." I think Carter Worth, which, by the way, I noted something. He was so emphatic about saying something about FANG that they're not going to be at all-time highs. So play is inside of a bounce area, and so it could be an entry point for somebody that knows the stock fundamentally. Usually, pivot points are support or resistance depending on which way it's going. So on the way down, if you hit a pivot point, it should be a rubber band where they're going to fight it out again.
Okay.
Since
all
they
right.
fought over it before.
How about Micron, MU? I know you've been active in that one as well. Micron Technology. Ooh, what a support level here. Bounced off 52.5 again.
Yeah.
Oh, no, okay, I see it. Go ahead. What do you got on it?
So it had a good day. It had a good flip yesterday. I don't know what it's doing this morning. I'm still short the puts at 40. Last couple of days I was talking to Michelle on that one, and they were like 90 cents or something like that still for October puts. I can't believe the high premium in there. So unless I am missing a threat in Micron, I collected way more than this. I think $1.20 to open those things. So I still like it from the sense where it could go up and down. I think all the media, all the analysts got this one wrong. And so I wouldn't listen to anybody out there. Just trade your book. It is a good swing trade higher if you think that tech is going to be higher. Now, here's the thing. Now tech touches all of our lives here in the developed world. And the adoption rate is really, really high, exponential. So all these companies are going to do well. And if they don't, they're going to get bought out. Very few of them are just going to disappear. So I like it for the long term. It's pretty cheap.
Nick, are you still there, buddy?
Yeah.
Okay, kind of faded in and out. Okay, how about we'll do two more here. KB Homes, KBH for TJ Mosley in the Google chat.
So they got hit hard by the rates. They were in the news last week. I can't remember who. Toll, I think, said something. So I'm not an expert on the field, but I'm not very excited about them in general. So I don't trade them. So let's look at the chart technically. Fundamentally, they're not that expensive. I think in that they're low teens as far as valuations last time I checked. So it is like a downside channel a little bit, but some sort of a pivot area above 25. So I don't know where it is this morning, but
Okay.
if I like them long term, I'm not scared out of them, but I'm not rushing to go long term them. If anything, I'd probably sell puts well below just on valuation if I knew it.
Okay, one more good one here. Canopy Growth, CGC. For you people at home, made its all-time high there at 36.40 on the Canada approval, and then had a big decline. But I'm licking my chops here at $31. You had a 31 even high, a 31.14 high. So I think this gets over 31. You got a rebound. Any thoughts on Canopy Growth?
So growth and licking your chops. Is this a pot stock?
It is.
Okay, so I've never looked at it before. It's got a nice trend, a good year for it, for those who are long it for the year, obviously. So I'm not familiar with the laws, but it is a bullish stock. And if I'm long it, I'm not getting out. But you have to do your homework. Now, there's a candle that was pretty interesting way back in April. What was that all about? That large tail up top. Maybe it's a hiccup on my screen, but it seems like that is the area where everybody gets out. So anywhere it gets to, where is it today? I mean,
30.86 up and down.
Okay, so $33 I would start looking at it for some reason. I mean, I'm looking at quite a few ticks that are important up there. So.
Is today your birthday?
It's close. It's not, but it's this week. Unfortunately, I will, age another year. I'm still trying to fight Father Time. So,
when's your birthday? It's not on the 4th of July, is it?
It's on the 5th.
Oh, okay. All right. Well,
happy birthday, Nick.
Yeah,
thank
happy birthday, Nick. Great input. Have a safe 4th of July, and we'll be back with you on Tuesday.
You're gonna have to speak louder because I'll be a year older by then.
Are you hitting
he said,
are you hitting that resistance yet at 50?
I'm over 50. I'm 51.
Right. Oh,
I applied for
catching up to Joel.
Here's the funny part. I applied for a Muay Thai competition a few weeks ago, and there's a box for age. So I put down 25 plus 25 plus change. So because everybody else is 25 and 19 and 18. So I was like, what the heck am I doing in here? But hey, that's how you can. All right.
All right, Nick, we'll let you hop. Thanks again. Have a safe holiday. And once again, we'll speak to you next Tuesday.
Likewise, and thank you.
Thanks,
All right. S&P futures are starting to leak here a little bit. We made the pre-market high at 27.4150, and that might stand up here, Dennis. That's over a 40-point rally from yesterday. We started to leak. Yeah, big pop.
Just like selling the whole yesterday. If you're coming in and selling, the open yesterday, you're buying, right into the froth here today. So if the fade trade has been working, so the setup is there to short this open, but I want to see what happens. Where's my line in the sand? So if I do, like I've been saying earlier on the show, you got to have an out. What's the high of the day here, Joel? Overnight high?
Well, let me go off. For the SPOOs, it's 41.50. And for you people that watch the secondary market, the Spider, it's 72.04. Or I'm sorry. No. I didn't bring up my pre-market chart.
74.04?
No, I didn't. Hold on. Let me change my time frames here. I got stuck on the 15. The pre-market high is 73.30.
Okay, so you got a line in the sand here, 73.86. I mean, it starts going in the 74 handle. I probably don't want to be short. But if you think, this move's going to get faded, which, it could, it's the potential to do. Light volume, though, light day. There could be some follow through here. I do notice a lot of sell imbalances here this morning.
Really?
Which could give us a setup.
Give us some.
Yeah, there is, and it's early. Well, GE has the eternal sell imbalance here now. Sorry, Spencer, I know you're still in there. GE, there it is, down another 20 cents on it. On a market that's going straight up, GE is still going straight down. So everybody who continues to try to get bullish on this, I tried for a while, and I couldn't, and that's why I sold the stock a couple months ago, happy that I did it. But, I mean, this stock is just a dog of all dogs. 348,000 to sell. I'm still holding my thesis that I think it's going to be single digits eventually. I know we had, Tim Seymour on CNBC breaking down the parts and saying the parts are worth 17.5. But if you're buying a stock because you think that some of the parts are potentially worth $17.50. I think it's the wrong reason. I want to buy a stock because it's performing well, because it's growing, because it's doing a lot of things right. If you think, just in a worst case scenario that they're going to, dissolve this whole thing, you're going to get $17, maybe it's the case, but there's a lot of debt there too to pay off. And I don't think they're going that way anyway. So I think it's kind of a moot point to just try to say what the sum of the parts is. Yes, they were selling some stuff off. Yes, they're probably doing what they need to do, but let's see a good quarter. Let's see them do something right before we jump on board here and proclaim that the bottom is in GE, because there's been a lot of people trying to call the bottom in GE for a long time, and I don't think it's in yet.
Okay, is that it for imbalances?
Bank America, 165,000 to sell. Citigroup, 45,000 to sell. The banks are trading up here this morning, so one of two things going to happen. They're going to start to leak, or those imbalances are going to flip to buy, and they might. So the banks are showing some strength. That is really what was my tell was yesterday. I had the banks as my leader. I shorted Bank America right on the opening tick yesterday. When you're hot, because I got really lucky here too. 28. I think I got short like 28.09. I was in the trade for 20 seconds, and it was 27.85, and I'm like, wow, that's just a huge dump. It just dropped literally 1% in 20 seconds, and I've been in the trade. So I covered at 27.85. Yesterday's low, I believe, was like 27.83. So, very lucky on that. But then it started to catch a bid. Sold off a little bit, but tried to start catch a bid again. Wells Fargo caught a bid, JP Morgan. The bank started to show some life yesterday, which kind of helped out the overall market because that was kind of the drag. So banks, I still think, are leading this market to a certain extent. I mean, tech is always leading it right now, but, you have intermittent leaders of other sectors. And right now, everybody's kind of interested in knowing how the banks are responding. They didn't respond initially well to the stress test. Some of them are trying to catch a bid here again, though. So let's see what happens. There were some sell imbalances here this morning. Do they catch a bid, or do they start to sell off again? Because I think if the banks start to roll over, I think the S&Ps could roll over here as well. So keep those on your screen. There is some buy imbalances. Twitter, 57,000 to buy. Twitter had a nice little bounce back day there yesterday too, washed out right off the hop, and then they bought it nonstop all day. So it kind of was a shakeout. I mean, a lot of tech stocks did that. Micron opened right at the lows, gap down huge, and they bought it all day. It was a good sign. It was a big win for the bulls yesterday. Just like I said earlier, as much as Friday was a win for the bears, yesterday was a win for the bulls. So now I got to stay kind of a little bit more neutral here until I can figure out, who's going to take charge here again. Because right now, again, the bulls are winning, but we are bumping our head against resistance. So hard to really get on the bull train here when we just rallied 40 handles.
Exactly, and the old red dog reversal in the Bank America. Take out that low. Come, but
Redler in a while.
You know what? I'll track him down. I'll track him down. Yeah, he's fun. He's fun. He does his homework too. We got to talk a little bit here. We got a little less than 2 minutes left. Deutsche Bank. Boy, comes out negative on the airlines here. Spencer, who are they? American, Delta, UAL, who are they picking on?
Yeah, I love this because it's right ahead of earnings. Delta reports earnings, I think, next Thursday, a week from this Thursday. And so I love it when a firm will come out, make a call ahead of the earnings. They're picking on United, American, and Delta this morning, downgrading all three from buy to hold, lowering their price targets on all three as well. Also a downgrade from Deutsche Bank at Pepsi, buy to hold.
The only thing I can say about the airlines is the charts look absolutely horrible here, and you got rising oil prices, and I've never invested in airlines. So hands off for me. Dennis, any thoughts on the airlines?
You know what? There's some hard bottoms, and like an LUV, and I know they didn't pick on LUV here, but look at the 50. I mean, if you want to try to call a bottom here, there's a bottom to lean on. So that's what trading's all about, is having an out. And the out's pretty well defined on a stock like LUV. American, not quite as well defined. Had an okay candle yesterday, but if you think, okay, well, I'm going to fade Deutsche Bank on this call here, and I think, this could open up the low. I never like to own stocks that are making new lows on the move. So if American falls down below the low from 3 days ago, 37.06, I don't want any part of it. But if you draw a line in the sand and think the low is in, you're getting an opportunity here this morning from Deutsche Bank to actually buy some of these things. So UAL had a nice candle yesterday. So this is not one that I would be, saying I think it's going down. I think you got some people caught yesterday. So I actually would be a buyer of this pullback here in UAL this morning, maybe leaning on yesterday's low at 69.21. It's offered 70.15. Get this thing in the 69 handle. Maybe it's one that could claw its way back here. So I don't know. I actually think I'm fading them on this. Again, having a tight stops on all of them though, because obviously, like you said, that American chart is just ugly. That LUV chart is not great. Delta chart is, just ugly too. But they were nice candles yesterday, so there was some life yesterday. So it's interesting they come out downgrade them today, because sometimes I like that. When you have a chart all of a sudden shows some life, and I get a downgrade, you get a shot, maybe to buy near the lows again. It takes out the lows, get out. So it's all about just risk management there. But you can maybe lean on those lows as protection.
Okay, Dennis. So everyone should tune in at what time tomorrow for the show on the 4th of July?
Yeah, he's making me work the show by myself, so I'll be working. I will be off too. I trade just the American markets mainly, so I will be not be here. So you can tune in all you want, but sorry, I don't think there'll be a show here.
One more. Roku caught an upgrade this morning from Oppenheimer. Oppenheimer has now gone from underperform to outperform on Roku in the span of 4 months. So they've switched and they are now bullish on Roku. But those are the only.
I just want to give a shout out to Larry Glickman here, who's been pounding the Google chat, who's been pounding the table on Roku for I don't know how long here. So, you've been right, Larry. You told us when to buy. Trading up 222 at 45.51. Pre-market high 46 even. Man, we're within the high from, look at 46, because 46.19 was your June 22nd high. So let us know when to sell, Larry. Spencer, you want to wrap things up and preview Thursday's show?
Yeah, should have listened. Well, I mean, not really much to preview. Not who can say what news there will be 2 days from now. But as far as tomorrow's show, we will be grilling. So I hope you got your Hebrew National and everyone enjoy the holiday, because we'll be off, as we mentioned. So I hope you all have a good rest of your day. If you want to catch our podcast, you can do so on iTunes, SoundCloud, Stitcher, TuneIn, or Google Play, or just rewatch the show on YouTube. I'm not going to cut the stream off at the end there, so if you're a few minutes behind, that's okay. You can just rewind it there. And that's it. So thanks to our guest today. Thanks to Nic and Gene for joining us. Thanks to all of you who joined us in our chats. Have a good holiday, everyone. We'll be back with you on Thursday.